Fine. Welcome to this webinar. We'll do a brief session on the new launched service by FXStreet, the FXStreet Signals. And I'll be structuring this presentation in 5 blocks. I will try to be as brief as possible. And after each block, you are free to participate with questions. So during the session, if there are any doubts, we'll be answering them as we move. Okay. I don't have a lot of fancy slides to show. It will be a type of bullet point presentation. We'll stick to the main points and try to go as fast as possible through all this. Okay. We'll be touching all the areas which we consider important, and also we build this presentation based on the interactions we had with members and users since we launched the beta stage of the product. So we more or less cover all the basic aspects of the service, but we nevertheless welcome every question that might arise. Okay, so don't be shy to interrupt the session and ask them. Drop the question on the chat box, on the Q&A box. I'll be answering them. Okay, fine. Allow me to present. My name is Gonzalo Moreira. I've been involved in the project since the beginning, in the design of the automation, of the strategy automation, which is behind the service. And you may also have contact with me in a private chat room, which is part of the package. Okay. Let's start here with the trading philosophy behind the product, which is a particular one. Okay, one of the axioms we follow here is to think big and trade small, and by that we mean that we usually have an approach to trading where we maintain a long-term view on the market, and at the same time we use small trades or small-sized trades to build a position in the direction we believe market developments will manifest in the near future. Okay, so it's a combination of a long-term approach, a long-term horizon, so to say, like an investing mindset which we adopt, but at the same time we are using multiple positions, multiple small-sized positions, so that we can trade in both directions and profit also not only from major trends, but also from all kinds of oscillations within that trend. I will get in more detail back to this topic later on. Okay. In any case, the philosophy is that by doing that, we are always in the market. Okay, by being always exposed, this means that any market movement, like the one we had yesterday, especially in yen pairs, will affect us in a way or another. By being always in the market, obviously, the market risk is always there. You are always exposed somehow. But by being exposed, you can also profit from incipient trends and from full hedge or full-blown trends or mature trends, because you catch them from the very beginning, since you were already exposed to the market. Okay. We always have positions in the market. That doesn't mean that all positions are long-term. It is just a small part of the positions which are held through multiple weeks or a month. This is a really small percentage. Most of the positions close in the short term, within the same day or within the same week. But there are always a portfolio of positions of trades which are open in the market, and the equity is thereby always floating with the movements of the market. Okay, so this is one of the characteristics of this product, of the way we trade the markets. That doesn't mean that we are necessarily trend following or mean reversal or swing. We combine different strategies, as we will see later on. Another plus in the whole product is the tuition you get along by becoming a member, especially through the private Telegram group that we built for that. That we created for this, where we continuously analyze the market, answer questions, doubts, and we try always to offer a educational layer on everything that we do. We explain our rationale at any moment, why we are positioned in this way or the other way, or why do we manage a certain position in a certain way, moving a stop, moving a target, whatever. And we try always to provide the educational basis on that. So we explain the very simple mechanics of how the market works, from very basic things like well, did you know that the pip value is different among several pairs? How is the pip value calculated? How does it change? How can it affect your trading? Or how to calculate margins and leverage by and position sizings and all these more mechanic structural things on which pertain to the dealing side. We explain a lot of this stuff, but also on analysis, kinds of different techniques on analysis. It's something that we are well trained to explain you, from Elliott wave to cycles to oscillator to support and analysis. There are lots of things that we share in the group, and you can learn a lot just by participating. So that you can use the service either as a full copy and trading service, so to say, where you mimic our trades, and that's all. Or you have the other side, the more educational, where you can always ask questions in the group and learn a great deal from that. We can guide you to construct your own strategies, and if you have ideas, we can try to program them, test them, validate them. So there can be lots of very interesting synergies coming from that human interaction, one-to-one interaction we offer in the group. Okay, let's move to the second block. I don't know if there are any questions in concerning what we explained until now. Okay, the system's anatomy. Here we will explain in more detail how we approach the market with our systems. Okay? We use a multi-strategy approach, as we've just said in the first block. There are lots of strategies at the same time, running at the same time, and each one trying to capitalize on a particular pattern, a particular technical setup. We have a strategy to trade the news, economic events, and the impact the surprise impact on economic events. So there are strategies for different trader profiles. There are trend following ones, there are breakout strategies, there are mean reversion, there are spreads, there are volatility. So lots of strategies, each one with a different time horizon and a different of a different nature. Okay, you may choose to follow them all the strategies, or you may choose to follow just a group of them or just one of them. Okay, this is something we are stressing a lot in the group, that there are strategies which have shorter term horizons than others, strategies which have their win rate in relation to the payoff ratio, in a way that if you prefer a strategy with a higher win rate, even if that strategy from time to time takes a hit and loses more than the average win, but it's compensated with a higher win rate. But if you prefer that, so we can tell you follow this group of strategies and you will be winning most of the trades, but expect from time to time to lose a little bit more. Yeah, but in the end, it's this is the result you can get. If you say, I don't have time to trade during the day, I just prefer to wait until the end of day and execute trades, we have a strategy which enter trades at midnight, just and open and closes the trades at midnight. So you just need to check once a day, and you could follow that one. Okay, this is the multi-strategy approach, and by multi-strategy we may have strategies buying and selling the same assets, the same pairs at the same time, as we will see later on. Okay, we work with multi-pairs. That means we work with all kinds of crosses, almost 50 crosses in the FX scene. We don't trade right now commodities, equities, or cryptos. We don't trade them yet. We may analyze them, we may follow them, and we do that continuously because everything is related, and we explain how to read the FX markets through the lens of other markets or vice versa. But we trade only Forex. But in Forex, we trade all kinds of pairs, okay? Because one thing we do is we do a currency ranking. We focus a lot on currencies before we focus on pairs, okay? And once you know the picture, which currencies are doing certain patterns or developing certain trends, then you build the pairs, okay? So we consider pairs as being ratios of among currencies. A currency pairs is in fact a ratio between two currencies, and both currencies may be rising, but one is outperforming the other. So if that currency outperforming the other is the base currency in the pair, that pair would rise. But if you want momentum, you would look for a base currency which is rising against quote currency that is falling, and that pair may exhibit a lot more of momentum. So some of our strategies do follow pairs, but others follow currencies. They build indices out of pairs and analyze single currencies. In order to execute the trade, they look for the synthetic pair, and then they trade the pair. But they are analyzing currencies, not pairs. Okay. The result is that we trade a lot of pairs, and not necessarily the majors. Euro, dollar, yen are the ones where we trade the most. Okay, because opportunities are everywhere, especially in less traded pairs or in pairs where people focus a little bit less. These pairs sometimes exhibit some inefficiencies that you can get in a major pair, which is a lot more efficient in that term, because a lot of more people look into that pair, a lot of robots trade that pair, but we try to develop strategies which can capitalize on inefficiencies in less traded pairs. Okay. We also combine different time horizons because by having a multi-strategy approach, there will be strategies buying and selling at the same time with different time horizons. This can happen. So in order to follow our systems, you would need a platform which will allow you to hedge. Okay. As for the statistics, we run an account at MyFXBook where you can follow the results in real time. Okay. This is the real account. We have a demo account since before summer, I believe by spring last year, and this is the real account we run since September. And a little bit about the figures here. You see our win rate is about 50%. Okay, and usually we have the average win a little bit higher than the average loss. Not so in terms of euro, we are now a little bit struggling with that. Also, the profit factor is very close to 1, which we are trying to enhance. Okay, but these are more or less the figures we have right now, and this is by using quite a low leverage. We'll come to leverage later on. We are right now recovering from a rally. This is the whipsaw we saw yesterday by the yen moves, which got us very directionally positioned in a shorting yen pair, so our equity suffered by that, and this is the balance curve, which is okay. We may see periods where the distance from the balance to equity, the floating drawdown is large, but we also have experienced periods where the equity curve is above the balance, yeah, and we don't cash all positions at once. We'll close them little by little. So there will be times where this curve will be above the balance, as we had in the in periods like summer last year, for example. Okay. So this is about the stats, and the stats we have just seen is for all strategies together. Okay. Some of the strategies, obviously, they don't have a they don't have a floating drawdown. Okay, they are much shorter term. They close all positions within the same day or within few days. So they have a different win rates, different ratios, etc. This is the overall portfolio, which being more long-term sighted reflects a particularity with these differences between equity and balance. Okay, and to finish the blog, let's just look inside how it looks like when we program the strategies. We use for that a type of drag and drop platform. You can see here. This is how we program the strategies, and here you can see more or less the complexity of the strategies. It does, by being complex, doesn't mean that the strategy is better or not. It's just that by the complexity just reflects a type of automation which resembles a lot to what you would do manually. Okay, the complexity this software allows, can make the trading resembling very much what you would do by trading manually or discretionarily. Okay, there are several layers of complexity. For example, this currency is creating an index for the Australian dollar, an index for the New Zealand. So we use elements. Yeah. This is how it looks like. It's this small box here. Inside looks like this, and you may have different layers of uh, uh, how to say the diagrams inside the diagram. So layers of computation within one same strategy. Okay, this is just to have a look inside on the how a strategy would look like. Okay, and once the order is sent to the market, the signal is sent to the chat room, to the also to the signals page. You receive the signal in real time, at the same moment the trade is executed. Okay. Okay. This is the systems anatomy block. I don't know if there are any questions. Okay, if not, we move on to the trading. How you could apply that to your trading. How you could execute the orders. The orders are executed manually. You receive them through the Telegram group, or you can see them on the signals page. We'll see here an example. This is the chat room, and an order here looks like this. Okay, the FXStreet bot sends a signal. The ANSU is the name of the strategy. Opened a Australian Canadian buy order. Okay, the order ID. Sorry, I've got a bit of sore throat, but I'm back. Okay, sorry for the interruption. So this is how the signal looks like in the chat room, and this is how the signal looks like in the signals page, where you see the same data, open price, the ID, and for those strategies with an explicit stop and target. You see them announced in here as well. So the execution would be manually once you receive the signal. You execute that manually on your trade platform. And as for the exits as well, the exits are announced with the same format, the same channels, and you also execute them on your account manually. We apply on our trading a discretionary layer on top of the automation, and this discretion consists in our capacity to switch the strategies on and off. This is the first discretion we may apply to the automation. So for in certain moments, we may prefer to be long a certain pair, and we may switch those strategies which trade in that direction. We may switch them on. If not, we switch them off, or we switch the other side, or both. If we are in a type of range trading market, we may have both running at the same time. So we apply that discretion to the automation. We may also abort a trade which we don't consider valid from a different point of view than the one the strategy is using. The strategy is looking for a certain pattern, but we may have a bit more of information on the macro picture, on the risk. We are on because of our exposure is already too directional, and we don't want to expose more in that certain currency. So we may abort trades manually. Sorry. We may also take profits or liquidate the strategy in profits or at a loss manually, and not waiting for the for the robot to exit the strategy. Okay. For those decisions, we use, besides of the technical landscapes which we continuously elaborate and share in the Telegram group, we also try to build a macro picture on all those themes that are affecting the markets, bullish and bearish topics and themes and arguments for each one of the currencies, for each one of the asset classes, which you do follow closely, like indices, equity indices, something we follow very closely. We build a macro picture, and we try to position our portfolio in the midterm, long term, according to these macro themes. Besides, we apply cyclical analysis. By cyclical analysis, we refer to the timing of certain market events, like volatility, like reversals, trends. We try to anticipate them using cycles. Specifically, we look for clusters in across several cycle theorists, and when we have a time cluster, that is a day or a week or a month, where a lot of cycles of different nature, with different calculations, are nesting, then we focus on that date and we prepare to take decisions based on that. Decisions by inverting our direction in the portfolio, by stepping out of the market, by trading more on volatility and momentum, etc., etc. Cycles do have this advantage that you can know them before they happen. So this is always a help for us to combine with our macro picture, and obviously with our technical landscape, as I just mentioned, and help us to stay on track and try to capitalize on movements ahead of the time. Okay. By doing that, we also there is a trade-off when you use cycles, that the cycle may be operative or not when you are within the time window, and you may be well or positioned or not. If you are not well positioned, obviously you have to endure a drawdown and wait for the next cycle cluster. This is something we teach also in the group. So much for the trading side. I don't know if there are any questions so far. We'll come to the last block. No questions so far. Okay. So here we come to money management, which is a key part, a key block on our service, something we stress a lot. We try to also to educate our members on all sorts of approaches to money management. It is a lot more than just position sizing in the Forex arena. This is something that is because it is very mechanical and it's just a calculation. There is no analysis. It's something that's quite boring, but it's something that we obviously use a lot. It's very important in our service, and therefore we constantly mention different sides of money management, like the exposure, what kind of exposure we have at any moment, how we are exposed to each single currency, if we are net long or net short each of the currencies, how much leverage we are using, and by that we mean effective leverage, that is the position size in relation to our equity. We do use hedging facilities, like I just mentioned before. But by hedging, I don't mean just to hedge 100% the position, to be totally market neutral. We are almost never neutral. The hedges we use are only partial, so we may risk-on oriented in our portfolio, but maybe 10% or 20% of the portfolio is risk-off oriented. And for that, we may have a net short yen approach or position or net position, but we may be long yen in a certain percentage. Okay, so that will be the kind of hedging we use, which is only partial most of the time, and also because different strategies operating at different times or different time horizons hedge each other from time to time. Okay, one position which is buying dollar yen to cash in next week, in another is shorting the same pair, the dollar yen, because it's overbought, and it capitalizes on a small reversal during 1 hour or two. Okay, but during that 1 hour or two, the hedge will be there. You'll see the hedge in this pair. Okay, in this particular pair. And then we have the position size. Here we do not complicate things. We use a fixed position size for all trades. We don't use a fixed fractional calculation where you start to apply a percentage of risk per trade. We don't use that. We use a fixed size for all positions. And that makes things much easier when you work with multiple trades. Makes things much easier. And but we teach also other types of position size calculation, other types of money management, which you can combine with particular strategies within our system. Okay, so if you choose to follow a certain strategy which supports a different position sizing calculation, we give you instructions on that. Okay, that's all. These were the 5 blocks I wanted you to know about. I don't know if there are any questions at the end. We'll be repeating here the same session next week 2 times. Okay, and if you have any questions, you can. If you are already part of the group, you are welcome to ask there for questions, or drop us an email if you are not part of the group, or just come for the next webinar geared with your doubts and inquiries, and we'll answer them live. Okay, thank you very much for coming, and see you next week. Bye.